A very good afternoon to one and all. On behalf of Essential Technologies, I welcome all of you all to the fourth quarter and full year FY22 earnings call for PTC India Financial Services. I will now be passing on the mic to Abhinav Goel, who's the Vice President, and we'll take it forward from there. Over to you, Abhinav.
Yeah, so very good afternoon to all valuable investors and other participants. So on behalf of company, I welcome you all. So today we are having an investor call for Q4 financial year 2022, a much awaited call, interaction for all of us. It was a challenging time for all of us. PFST was working very hard, all days, working, non-working, holiday, festival to perform and to deliver in the interest of all stakeholders with all regulatory compliances. Fortunately, now challenges are behind us and now we are looking forward for better future. So today we are having our MD and CEO Dr. Pawan Singh in an investor call. Along with we are having Mr. Vijay Singh Bist, Executive Vice President, Mr. Sanjay Rustagi, CFO, Mr. Sitesh Sinha, Functional Head Credit, Mr. Ankur Bansal, Vice President from Business Development Unit, and Mr. Prashant Gupta, he is AVP from Financing. So I request Dr. Pawan Singh, our MD, to kindly take the lead. Thank you.
Oh, thank you, Abhinav. And once on behalf of PFS, let me give hearty welcome to everyone who has joined the investors call today. And it was a long-awaited call. And we have been, as Abhinav pointed out, my team and everyone has worked very hard to see it happen. And though at this time of the year, we should be coming with the Q2 numbers, but for the current year, but this financial year had to be accounts had to be taken up first. But very shortly, now this is behind us, so very shortly we will be able to come with Q1 and Q2 before you. And in fact, last few months we had some challenges because of the result not getting finalized, because our board, which had come from PTC, was very strongly of the view that unless the forensic audit is complete, they would not be taking up the accounts. So while the forensic auditor was taking his own time, and of course with lot of effort from our side, we were able to at least see that he was able to not exactly meet the terms as per the engagement letter, but still try to deliver it in a certain time limit so that we could bring the result to you today. One way it in retrospect has been, though delayed, has its own impact, but in retrospect it is also good because it has taken care of all the uncertainties regarding the issue of forensic audit, and the auditors who had taken much a stronger view of the accounts in absence of forensic audit, at least they have this time tried to find a much moderated, of course not totally without qualification, which we also felt that was little unwanted. But however, keeping into consideration the precedents and timelines, we went ahead with that. But hopefully that also will go away in maybe a quarter or two as we furnish the other results. But important part was, we went through the challenge when we were at the peak of our performance. So if you look at, I'll just like to take you to the fact that though for the fourth quarter, we did not do any activity because our board was not constituted. And in the first quarter of the current year, only during the later period that the board got constituted, and that also with directors from the holding company, and not our own directors. But despite that, we were able to sanction in 9 months loans of 4,150 crores and do disbursement of 3,888 crores against a sanction of 4,098 crores in the previous year for the whole year, and 888 crores disbursement against 2,647 for the whole year in the preceding year. So we were at the peak of our performance. And notwithstanding the fact that the fourth quarter is the most performing quarter of the year, and, the largest disbursement transactions happen. So, but nevertheless, that whatever the momentum we have gained because of the direction in which we are moving, I think from now onwards we'll be able to maintain that same momentum. Of course, I'll request Sanjay to later on give you a backdrop of the financial results, but at the face of it, we have been able to give for the entire year a PAT of close to 130 crores and profit before tax of 173 crores against 93 crores and 25 crores last year. So there is a big improvement there, considerable improvement. And what is also important, some of the qualitative aspects which I would like to emphasize here is that since we are coming at a time when Q1, Q2, so of course CFO will further elaborate on that, but probably, when we are taking numbers as of now, probably the provisioning for 3 quarters have almost been taken care of. So that is the importance of this result, because it is coming at a time when first 2 quarters result would have also been there. So this result has not only absorbed the numbers of previous quarter, but it has also in a way, because all the factors are taken on the balance sheet date, and the first 2 quarters also whatever discount had to happen has been also appropriately covered. So coming back to our business, just 2-3 lines, and of course my team will give you specific details. But one thing is very clear, because we are committed to become a green, sustainable infrastructure finance company. And I'm speaking from COP27, which I came to attend here in Sharm el-Sheikh. And let me tell you the global flavor, because last a few days, because all the international organizations are here. Most of the important head of states are here. Most of the important environment, finance ministers are here. So it is going to give kind of direction which way the world is going to move. And I'm so glad to note that what we had envisaged about say 4 years back or 3 years back to become a green infrastructure company, and that is the flavor of the day. I mean, that is the emphasis. We all know the global temperature is rising, and despite the commitments made in the Paris, conference, that we will bring down by 1.5% the global temperature on a year baseline of 2005. But and then of course it was said that it will be, but it looks like that even 2.1% would be difficult to achieve. So all the world leaders, both in corporate sector, the country leaders, all have committed that now onwards all the countries will work together with a common focus that the net zero target, everybody will be working. And many, of course, there are challenges for emerging economies, but the developed countries have committed to meet, many of them have committed to meet net zero target by 2030. India has committed to meet it by 2070. But many of the developed countries have committed now that they will, probably prepone the date and try to achieve this before the 2030. So globally, there were city mayors from various cities across the world. All of them are talking about the only one single challenge, which is the how to take care of the green sustainability issues. In India, we have 160 megawatt, 160 160,000 megawatt of renewable energy, which includes hydro also. And by 2030, we want to become 500 gigawatts. So almost closer to 2.5 times of what the current capacity is, which throws up a lot of opportunity for us for financing in this sector. And e-mobility space is another space which is moving very, very fast, very rapid pace, because the global pollution, the heating is account of, primarily they feel that it's on account of, the one is natural, of course, degradation which is happening, but primarily on the contribution side, it is primarily because of the power generation, industrial use, and transportation. So these three areas are totally under, focus, and where huge opportunities are likely to come. And not only on the liability side, also we would hope to benefit, because a lot of international funds would commit money to channelizing into this agency, this area, and PFS can play a very important role as working as a financial intermediary. But many of the international organizations who would like to fund the growing opportunities, in the renewable sector, especially in India, where the target is very high, and especially that we have been able to build up bankable models under renewable energy. And of course, another focus area which is within the renewable energy, another focus area which is going to become very important, because we have to have not only clean power, but we have to have reliable power. So the battery storage is another area which is going to come. Already, Government of India, 10,000 megawatt first capacity bid has been invited. That is going to be accelerated. Also, the area of, e-mobility, as I said, that is also related to battery capacity. So that also will be there. So these are some of the things which, the global economy is poised to move in that direction. And we are very much, very well placed. I mean, we have already positioned ourselves to take advantage of the, global economic, transition, as they are using the word. This is an energy transition, a global economic transition. So from, dark economy or black economy, we are moving to, now cleaner or greener economy. And as an institution, we are very well placed. Another thing I wanted to share, which we will try to achieve. In fact, just 1 second. Yeah. So this we'll also try to achieve is. I'll just 1 second. So I said that we are very well positioned, poised to, be part of that transition, global economic transition or global energy transition which we are taking. And from our side, we'll also try to, look into areas and support projects in this space, and including the support of circular economy, which we are also talking about. On the CSR side, of course, we have because one of the reasons today I'm here because of the work which we did in the CR side, and along with the CII Foundation, where the United Nations has given the work which we did in crop residual working in Punjab and Haryana, to bring down the air pollution in the northern area of country. That is one of these projects which have been selected by United Nations, and this is also one of the reasons why I was here. So with this, I'll request Sanjay to take you through numbers, and then, of course, Mr. Bist will give an oversight on the monitoring area, who is now Executive Director, and Mr. Sitesh Sinha will give you our little bit of glimpse on the credit side, and on the business side, there is Ankur who would tell how are we, what is the pipeline which we have, or what we call order book. So over to you, Sanjay.
Good evening to all. Sir, with your permission, we just want to run through the presentation. the corporate presentation.
Please go ahead and do it.
Yeah, Abhinav, just.
Yeah. So, good afternoon. So, this presentation, some of the aspects we updated as on today, few of the aspects are being presenting as on 31st March. So, we try to give it more updated so as to give a fair idea to all stakeholders. So, we are PFS, we are a clean, sustainable, clean, green infrastructure finance company. So, we believe not only in providing a economic benefit to the country, we also believe to preserve the environment so as to protect our generations to come. So, this is our presentation at a glance. So, this is how, we are diversifying our sanctions, our capital adequacy, our debt equity, our net interest margin, our disbursement, and our rating, which is a very crucial factor for any rating agency. So, as of now, though we had been put it on watch by CRISIL ICRA, but yet we are representing them so as this watch category may be restored to stable, which it was before arising of the issue on 19th January 2022. Moving to next, Sanjay sir, your part.
So it is giving a quarterly snapshot. The profit before tax, which was the same quarter last year, was 30.54 crore. The loss, and which we converted into the profit of 33.52 crores. The profit after tax, which was around 53.66 crores, loss was there in last quarter of the previous financial year, whereas this last quarter of this financial year, we incurred a profit of 24.98 crore. The sanction is 2329 crore, the previous FY21 last quarter, whereas Q4 22 it is 1331, and we made a sanction is 0, and the disbursement is 380 odd crores. The return on asset has improved to 1.03 against 1.86. The interest spread is almost same. It is 2.92% against 2.98%.
So it is, we are listed on both the exchange. We are supported by professionals of around and a team of consultants. We are incorporated in 2006, having a market capitalization of 912 crore. We are a profit-making company, and our vision is to become a most preferred financial partner in sustainable infrastructure value chain. So this is our journey so far. As we mentioned that we started in 2006, and 2021 we entered into a foray of electric vehicle segment, where we have funded 350 buses in Lucknow, in one of the I should say esteemed project of the country. So we extend our support to finance to environment friendly project which contribute to sustainable, greener, stronger. These are our product services. So we do debt financing just like any NBFC. We also do fees-based services. We do provide consultancy to a lot of corporates, and we do advisory services also. So these are the key functions of the company, starting from interest rate mechanism to corporate strategy. We are having a separate department for each of the functions, where we are having a dedicated, committed, experienced team of professionals. This is our business model. So focusing on few of the robust area where we are working. And how we are a unique investment case. So this is on 5 parameters. So we focus on sustainable infra. We focus on high operating leverage and better margins. We believe in reduction of our stress and fear, which can be visualized our performance over a period of last few years. And we are backed by motivated and experienced management who are having a proven expert in leading business towards the business vision of the organization. So we are navigating to our next strategy. We are leveraging existing relationship with domestic and global agencies so as to increase value to all our stakeholders and to increase the brand value of the organization. It is our risk management system. We are having very robust risk management system. So on an average, if we are getting say 5 projects, or after getting totally through various stages in the organization. Only 1 or 2 project gets through our system. So that can be visualized by the fact that in last couple of years, whatever we sanction, none of the account has turned into NPA. It is our management outlook. So we are focused on its stance of progressive growth and stability through the enhancement of our products and quality of our portfolio. I request our functional head Credit to take lead on this slide.
So as MD sir, thank you, Abhinav. As MD sir has explained, we are marching towards the sustainable infra projects. So this is a quick snapshot how over the last 5 years we have moved towards from power generation funding NBFC to the sustainable infra financing. Under that, we have for renewable energy asset we have sanctioned to 14,500 megawatt with the cross sanction of 30,000 crore. Similarly, for recent e-mobility concept has come some last 1.5 years. In that we have sanctioned 350 crore, 350 buses with 334 crore is the sanction amount. And another rail and road, other infra, we have sanctioned close to 3,798 crore, which is apart from renewable, this is the biggest portfolio in our biggest asset in our portfolio. And towards the sustainability, we have done couple of water treatment projects in India under the Namami Gange scheme, that is the sovereign company of the government of India, rated. So that we have sanctioned couple of projects with gross sanction of 503 crore. And transmission as well, this is the very annuity-based scheme where the risk of default is minimum. Under that, we have grossly sanctioned 3,357 crore, which will have assisted to develop more than 4,400 crore of kilometer length in India. So, and power port, we have sanctioned not very much project, but it is couple of projects we have sanctioned in last 5 years. This amount to 700 odd crore with 43 million tons per annum is the port capacity we have sanctioned. So by this renewable assets funding, we have been able to abandon the over 25 million tons of carbon dioxide per annum. So next slide.
So these are our key lenders with whom we have developed the relationship over a period of time, and we are quite hopeful the kind of support we were used to get from these lenders and from new lenders, we will continue to get that kind of support. So
these are the marquee our customer and developer to whom we have funded. If you can see, these are the top 10 companies of India who are working in the different infrastructure segment like renewable or road or port or transmission or any other upcoming new sustainability project that is like Green Sail, Radiance. So, and port side we have funded JSW. So these are the marquee customers in India. We have supported that. That indicates what is our quality of our credit portfolio.
And we continue to add new customers like the name being mentioned here. So financial aspect, I request our CFO.
So with respect to the liquidity, which is given in this slide, so companies have been the ample liquidity to meet its both the debt obligation as well as the debt of the business needs. As of today, we have around 1,245 crores of the high quality liquid assets as against the RBI requirement of 245. So RBI recently come up with a circular where NBFC has to maintain a liquidity close to next 30 days, whereas as per the available information, we are maintaining much above that, which will be required to meet the business needs as well. That will be used for the disbursement. With respect to the loan sanction, if we, as Dr. Pawan Singh told earlier, we have overlapped the FY21 numbers with respect to the sanction that were around 4,098 crore, and this year we done 4,150. And considering in Q4 22 we are unable to sanction any new loan because of the non-constitution of the board. But in fact, the loan disbursement has increased close to 50% from 2647 crore to 3,888 crores. The loan book has come down a little bit from 11,000 odd crores to 8,700 crores. And the capital adequacy has improved significantly it has increased to 26.71 crore against the 24.10 crores. If we talk about the net interest income, it's almost the same as compared to the previous financial year. It is up to 344 odd crores against the 353 crores. There is a marginal decrease because we are unable to sanction new loans in the Q4. The yield on the earning loan has increased by around 5%, whereas my cost of borrowing has been reduced by 10%. It shows the operational efficiency which we have created during the last year. And it resulted in the increase in the interest spread by around 12% from 2.71% to 3%. The net interest margin increased from 3.47% to 419%, close to 20 odd percent. The earning per share has also increased fourfold to 2.02 from 0.042%. Cost to income remains stable at around 12%. And the debt to equity ratio, which has improved to 3.14% from 4.27%. And the return on net worth has also improved significantly, around 400% from 1.22% to 5.93%. And return on assets also from 0.22% to 1.24%. This is the snapshot of the profit and loss account for the year ended. So this financial year the profit has been increased to 130 odd crores against 25 crores, giving a return of around 407%. And the total income has reduced marginally from 1,139 crore to 968 crores. The total expenses has increased at a more percentage than the decrease in the income. It has reduced to 794 odd crores against 146.03 crores. So this is the little bit snapshot around the performance. The sector-wise outstanding, the total loan book has been divided into few categories like renewable, transmission, sustainable, roads, state power, utility, thermal and hydro. The total loan book as of 31st March 2022 is 8,650 odd crores. And the renewable sectors comprises of 2,911 crores. And the transmission sector contributes 656 odd crores. The sustainable infra 214 crores. The road is 1286 crores. The state power utility 2516 crores. And the thermal and hydro 876 odd crores. And others 191. And other includes the port, manufacturing, mining, sustainable infra, water treatment and e-mobility. With respect to the under the corporate lane under the respective head, this is the bifurcation between the corporate lane against these respective sectors. Like renewable may 621 crores is towards the corporate loan. The state power utility, the entire amount is a corporate loan. The thermal and hydro 143 odd crores and the others is 227.
Yes, sir, I would like to a couple of points here in this sector portfolio. If you see, although bottom line total number has been reduced, but if you go by our vision and mission, our renewable portfolio, if you see the business model we have adopted for last couple of years, it is to funding which have given the higher yield in renewable sector as compared to the providing the long-term sanction. So if you see in the corporate loan, earlier we have only funded, last year book was 21 book was 275 crore. This year it has been increased to 621 crore in the renewable asset. Second thing, toward the sustainability, we have also focused on the niche area and which is environment sustainability, that is the e-mobility and water infra. Last year our book was only 30 crore. This year in 22 it has become to close to 245 crore. And third thing, last thing, we have keep on telling in investor call, we are reducing our carbon footprint. If you see the thermal sector exposure in thermal, It was last year 21. It was 1,357 crore. Now it has been reduced. 50% has been reduced, and now as on 31st March 22, it is 875 crores. So these three significant points I would like to mention here.
So on thermal segment, just to mention that our vision is to become a zero carbon emission company. I mean the project which we are funding. So probably in coming year we would be having zero exposure on thermal sector. So this is synergy again portfolio wise shift. Your area.
Next is percentage. See, if you see the maximum percentage, the renewable portfolio, it has been reduced from 44% to 33%. And what we have increased in view of that, we have increased in other area and sustainable infra, which was earlier there was hardly any presence, is there less than 2-digit figure. Now we have close to 20% figure. So this is whatever the shifted from renewable energy asset to other area of the infrastructure business. And most of the corporate loan, which is structured loan we are calling is a state power utility. That position remains same. If you talk about the numbers to number, in FY21 it was 2451 crore. Again in this year it still remained 2515 crore. There is hardly any change. But percentage it has been changed because of overall reduction in book from 10,751 crore to 8,650 crore. That's why number looks like our state power utility exposure close to 30%. Earlier it was close to 22%. So because of denominator has been decreased, that's why percentage has increased, but absolute gross disbursement of book has remained same in the state power utility.
Yeah. So these are our performance indicator, our cost of fund, our spread, our NIM. So all are correlated to each other. So if, as mentioned by CFO earlier, that the pace with which our borrowing cost has been reduced was much higher in comparison to having an impact on our yield. So the net result would be reflected in our spread, which is 4.3%, and in NIM, which is 2.92%. So overall, there is an increase in our performance. So these are the stage 3 account, which are problematic area for any organization, any NBFC or a financial institution. So be a transparent company, we are giving full detail, whatever the exposure we are having, gross exposure, whatever the provision on the respective loan account we are having, then net exposure which been reflected here, then again we are having some impairment reserve. I mean, over and above what has been stipulated by the regulatory requirement, we have created a reserve on some of the loan account which is being reflected here. And subsequent to 31st March 2022, we were having a recovery of 147.8 crore around from two of the loan account. One is NRSS 36 and another one is Athena Chhattisgarh. So NRSS 36 is no longer, it's a third last one. So it's no longer in our book. It has been resolved, and Athena only slight exposure is there, probably, which may also be resolved. It is in lakhs actually. So very insignificant exposure we are having. And another project, Danu Wind, we have started receiving payment from the borrower. So probably we are quite hopeful then in the time to come, it would become a good account for us. So it is our credit standing snapshot, as can we visualize that our stage 3 has been reduced, then again our NPA has been reduced, then again our net NPA has been increased slightly, but in actual terms we were visualizing that there should be a substantial amount of business in Q4 financial year 22, which has not happened because of unprecedented circumstances. We are quite committed that whatever the deficiency has been created in between period, we are committed to achieve that. We are committed to deliver on that aspect. We have not revised our goal. Our team is working hard to achieve whatever we visualize at that point of time.
And in fact, Abhinav, since we have received around 147 odd crores post March, so as on 31st March 22, the outstanding was 387, and if we deduct 147 which we have recovered, the amount outstanding will be 240 odd crores, which will be lesser than the December number.
That's so, sir. So other than the business, other than the indirect contribution which we are making to the environment, we are doing some social responsibility also. So for Delhi, the big issue was smoke because of burning of parali in Punjab and other neighboring states. So we have contributed significantly on those aspects. We are having e-mobile health for the weaker section of the society. Lot of projects we have undertaken for the benefit of the society. This is our standing as on 31st October 2022. So this is all in short about us. Over to you, MD sir, for any contribution on our delivery.
Yeah. So thank you very much for the presentation which you made. So in a nutshell, I will just recapitulate my team had said, because we have done better on most of the operating parameters, including PAT, gross profit, ROAs, the improvement in capital adequacy, the debt equity ratio, and in absolute number terms, even in the stress asset. So all parameters we have been able to spread. Everywhere we have been able to do. Two things I wanted to highlight here is, one is that we have over a period of time developed a very strong underwriting capability. Of course, we could not get the full benefit of it in the last quarter of the last year and the first quarter of this year, where board was almost non-operational. Now, not only the board became operational, now we must have recently said that the PFS has got its own independent board also. So, second thing which I wanted to highlight here is that, we have a very robust pipeline. Just, I will quickly ask Ankur, because I don't want to, deny you of questions, because for a long time you're not interactors. But quickly, the pipeline, the business which we have in hand, like Ankur, just in very shortly, you just explain.
Thank you, sir. Sir, currently, sir, as far as business is concerned, so we have a pipeline of upwards of 4,500 crores, and this pipeline is fairly diversified in nature. This is spread over sectors like roads, ports, airports, logistics, EV sector, water, waste management, then shipping, waste to energy, and power transmission. And broadly on the breakup of the pipeline, the renewables would constitute around 1,500 crores, electric mobility is around 1,000 crores, ports is around 700 crores, power transmission is around 200 crores, shipping and roads would be around 1,500 crores, and then waste management is around 350 crores. So this is an overall pipeline of more than 4,500 crores. And then secondly, like MD sir has told, that PFS has been focusing on sustainable infrastructure. So we see a lot of upcoming companies in sectors like EV, water, and waste management. And PFS has always believed in supporting upcoming companies to give them growth capital. So with the same strategy, we have been supporting, not even apart from established companies, we have been supporting upcoming companies, and that which helps them to achieve scale over time. Thirdly, I would like to highlight that PFS has been very nimble in its approach, and they've always believed to have a first mover advantage. Like Sitejji just told some time back, that we were the first movers in the EV sector, whereby we have funded around 300 buses in UP, electric buses in UP, and we had sanctioned around 350 crores to green cell mobility. So this shows our commitment not only to sustainable infrastructure, but to be first mover, having a first mover advantage, and supporting companies in their growth cycle. Then fourthly, I would like to highlight that apart from diversification in book, we are also very fairly diversified in our products. So apart from the regular project financing, we have been supporting infrastructure companies with products like working capital, bridge loans, short-term loans, and then revolving construction finance, which has been utilized for capex at the SPV level. So basically, PFS is able to offer a various gamut of services to these infrastructure companies who basically approach us for all their funding requirements. And in turn, this helps PFS to increase the yield on the books also, because these innovative financing structures give us a better yield than project financing. Secondly, it helps to turn our books very fast,
And thirdly, it helps to earn a lot of fees on these kind of structures. Then I would like to highlight that going forward, our focus is to basically grow our book size significantly in the balance year left, and we'll be focusing on core infra, which are roads and ports, etc. And we'll also focus on sustainable infrastructure like EV, water, and waste management. And we have a robust pipeline towards that end. And we are, I think, well equipped to underwrite all these kind of loans going forward. That is a brief from business.
Thank you, Ankur. So I think now we can have Q&A so that.
Okay, we'll now open the floor to Q&A. Participants can raise their hands and we'll queue them up in terms of Q&A. In the meanwhile, Abhinavji, there's a couple of questions in the chat if you would like to begin from there.
Yeah, so Amrita, I just reading it. So there is a question from Mr. Siddharth Shah that when do we plan to announce the result for 2 quarters of the current financial year? I guess.
So let's CFO address that question. And only thing is from a management side, we have given him a target of doing it as quickly as possible. So it should be days. Now I leave it to Sanjay to decide the number of days.
So, we are trying our best to as quickly as possible since the present auditor has given his notice for intent to resign, and we need to appoint a new auditor. Once the new auditor get appointed, but we are trying to get this done in a quick time, maybe in 2 weeks or time.
So we are trying to get it done in 2 weeks. So our team is working hard. Most probably yes, 2 weeks. Another question is, what are the chances of the company being suspended for training? If I have understood the NSE circular clearly, you have to declare the result of the first 2 quarters by 7th of December. I guess it's already been replied. So once we are planning to get it addressed in 2 weeks, then probably there is a very slight probability of getting this immediate. Third one is, sir, that I remember you mentioning in one of the previous conference call regarding compensating the investor with healthy dividend. Why have not we declared any dividend for the previous year?
Yeah, so this year we could declare dividend because certain appropriations went into our reserves, and through RBI formula, dividend was not coming. But in the current year, because I've already said that I can't tell the numbers in advance, but I've already told when we decide the balance sheet in the last quarter and we are deciding today, the provisioning numbers to a very great extent have already been absorbed. And so we should look for a good result, and surely we would like to compensate for that this year also.
And the last question, sir, in the chat box is for guidance for financial year 2022-23.
Yeah, so as I have already said, a couple of points, because one is that my business head has very clearly said that we have a very decent pipeline of over 5,500 crores. And many of these pipelines are at various stages of underwriting. And many of them are low hanging. And our effort is to take up projects where we can, which have faster deployment of resources. And that is one of the reasons, apart from the carbon footprint. Another reason why we have avoided doing thermal and large hydro projects, which, also was one of the cause of the stress in our balance sheet, is, we want to avoid projects we have a longer gestation period. And we want to do average gestation period, we want to cut down less than a year for most of the projects. So that is what we are endeavoring to achieve. So deployment of funds really. So we hope to do, we hope to beat the sanction target of last year, what we did, and also meet the disbursement target closer to what last year we did. So based on that, what NIM and spread you are saying, we are maintaining a good NIM and spread. We are maintaining spread close to almost 3% now, a NIM of close to 4.9. There is a very good capital adequacy. Debt equity is also very good. And liquidity challenge is also not there for us. So we hope to, with this kind of spread and the kind of sanctions and disbursement we will do, we should be able to, incrementally, accordingly add to our balance sheet. I cannot exactly give you what P&L number will come, but it is anybody's guess, and you can make a back-up page calculation based on the 4 or 5 parameters I have said. It will be very easy to calculate. And as I said that, the provisioning numbers already we have taken historically whatever provisioning had to be done, we have done, and most of our assets which are there, stress asset very limited, which is there, are on a stage of resolution.
Mr. Nihar, we are having one question from Mr. Karthik. So instead of I get it and read it, may request Mr. Karthik to please raise the hand so as he may ask the question directly.
Mr. Karthik, kindly please raise your hand. We'll allow you to voice out your question. In the meanwhile, sir, there's a question from Mr. Dinesh K.
Yeah.
Dinesh ji, please go ahead.
Hey, sorry, I was on mute. Hope my voice is audible.
Yes.
This is a follow-on question regarding the auditor. I think you said that after finalizing auditor, you will take 2 weeks to declare result, or the auditor is already been finalized?
The auditor, because the existing auditor has to resign, and then we can appoint the auditor. So selection of auditor has already been taken place by the board, but his appointment is pending. So the 15 days from his appointment. Little time to understand the business and see the financials. The financials from our side is almost ready. So it is depend upon him how quickly he can give his report on those numbers, review it, and
his selection is already there, and he should, and CFO already has given you a target date, so that should be what we should look at.
Hi, this is from Karthik. Thanks that you already released all the the results soon, or already released this last year financial. So I have a couple of questions. So is stake sale from the promoter still on the card? Like we had some announcement around 2020 around these, and then because of the valuation, they were having some concerns. So is it still on the card, or it will be there is no plan?
Already promoter has written that the matter has been stalled. So till they take it up again, it's not on cards immediately.
Okay, thanks. So and what is the plan to reduce the net NPA, because still we are seeing that growing further?
No, see, net NPA has not gone up. I think Sanjay will explain that. In absolute number, it has not gone up. See, there was one asset which we were already giving in stage 3, which, of course, that is a thin line, because till today also, because earlier we were not giving as NPA because of the court order, but it was definitely in stage 3. So, in fact, provisioning numbers on that have gone up. In the previous quarter, December quarter, we did some incremental provisioning there. But the status of project is, definitely better, because this is that ILFS Tamil Nadu which I'm talking about, where the resolution plan is almost on the anvil. And also this national asset reconstruction company which has been constituted. So, of course, today we avoid doing a large consortium lending, but these are some of the legacy cases where, with this, the public sector banks who are mostly leading such cases have become very comfortable. So they're trying to push this through NSCL route. And since it's operating plant, you know how power demand is there today. So we hope to get, reasonably good resolution out of that, either through a resolution plan or through sale through the National Asset Reconstruction Company, which should happen in a month or two. But the number has not gone up. I mean, there's no further addition. There's no slippage in these recent months or 1 year. There's been no slippage of any kind, except Asian Hotel 3 crore, which of course is a negligible amount, but there also that this is a realizable kind of money. So only thing is that what we could have avoided showing this ILFS account as not NPA because we have a court order. But as a matter of prudence, we are, disclosing it that it has become NPA. But of course, we also have to be careful not to err on the wrong side of law because, we will be always making a clarification to this effect that as far as the law goes, this is not an NPA, but as a matter of abundant prudence, we are showing this as an NPA because, because this particular asset went, it's operational, almost 2,200 crores lying in the TRA account, but debt servicing is not happening because, as you remember, amber, green, and red. So this, it felt in the amber category, and as soon as the resolution plan is approved, it will go into green category, and the debt servicing will start. So there is no deterioration in neither in the asset quality nor there is additional slippage of NPA. This one account which was stage 3, in any case, it was accountingly getting treated the way it had to be treated. But and provisioning also it was getting treated the way it had to be treated. But only thing is that we have now put it as NPA. So that leads to, in the optically it looks that NPA numbers have gone up. But Sanjay would like to add to that. Hello.
Yeah, I'm able to hear.
Yeah, Sanjay, will you like to add to?
Yes, sir. I would like to add something. So the net NPA number as on 31st March 22 is 387, and we have already received around 147. And so that brings down to my net NPA number to 240 odd crore against the December number of 253. So it is the lowest number amongst the previous 6 quarters, if we can say that. And like you already said, there are 2 accounts under resolution, if I remember correctly. One is the Meenakshi, which is under ARC sale, the asset reconstruction company, and
Meenakshi and
ILFS. ILFS. So if these 2 accounts goes, then the NPA number will come drastically down, significantly down. And there is no incremental NPA, no new slippages post March 2022.
Except Asian. That was in 31st March. But it's a small amount of 3 crores.
3 crores. That is in the last quarter.
Yeah,
that has already been considered in the.
It is included there.
So this is from my side.
Yeah. I think that should answer the question.
Okay, Karthik, your hand is raised. Do you have something further?
Yeah, I guess you need to allow. He's on mute. Yeah, Mr. Karthik, you're on mute.
Yeah. Sorry, I was not able to click. Yeah. So the follow up on that collection part. So have you done all the collection from the bad asset or stressed asset, or is there any further which we are like apart from those 2 accounts which you have mentioned? So is there further which we are planning to collect?
So, Mr. Bist, would you like to add to what Sanjay said just now?
Yes, sir. Thank you, sir. As Mr. Sanjay has already mentioned that after 31st March, we have already, resolved one account, which is NRSS, where decision was taken prior to 31st March, but we received the amount of resolution in the first week of April. So that is around 127 crore. So that is removed. And in another account, which is Athena Chhattisgarh, we got an amount of around 19.5 crore, where the amount, the gross loan remaining was around 20.44 crore. So that makes it 147 crore that we have got. And then apart from that, there are accounts like if you see by number wise, which are very small, like there is a account ICOM around 2.65. Beyond that, also we have received around a small amount of 1.2 crore, and this will be now taken care. And then if you see the larger amount, there is this Meenakshi is already in the last stages of NCLT, and here the banks are also now, the State Bank is the lead. They are also proposing it to sell to the bad bank, that is the NARCL. So we are hoping that we will get some amount there. So in the next, I think this 1 or 2 quarter, it will also get resolved. And beyond that, we have got NSL is only there, which is 100% provided. No, there is no further addition. And there is one more account which is in the stage 3, which is Danu. Now, in this case of Danu, already PFC and REC have started, under the late payment surcharge scheme, they have started giving directly to the generator. And from the last 3-4 months, we are receiving equal amounts, and it will be resolved under 12 equal monthly installment. So the entire amount would be received. So for the last 4 months, we have received amount. Sanjay, can you tell amount?
So it is close to 20 odd crores which we have received.
Yeah, close to around 20 odd crores we have already received, and the balance I think will be around 60 crore or some 70 crore would be there.
53.
Yeah, 53 crore. So that will be received in the next 8 months. So that's all from my side.
Okay, next we have Shivam Saraswati. Shivam, you can go ahead and ask your question.
Hi, I hope I am audible.
Yes, you are. Please go ahead.
Okay, so PTC India holds about 65% in your company. And in one of the previous interactions with the management, they spoke of plans for divestment. So could you shed some light on the way forward? And also, is there any further strategic initiatives planned by the business?
Yeah. So as I had mentioned earlier that, the communications to stock exchange by PTC last was that the whole thing has been kept aside. So they have not come back on that. So I presume that as on date, the position is same. There's no modification. So they are not looking at this investment now. And also it would be, best that, let PTC answer this question because they were the right people to answer it. But as of now, the way it is that this has been stalled and it is not happening anything currently, it is not likely to happen. As far as our strategic plan goes, our strategic plan goes because the vision which, is basically coming from, we have a very vision which has come from, global scenario where, economics and sustainability are tied. And we are totally committed to have, our contribution, India's contribution to net zero. We want to be a player, important player in that. So our vision, we want to position ourselves as India is one of the major organizations which would be contributing significantly to the net zero and be the part of economic transition from, dark economy or black economy to green economy. So this is our vision, and that is where the huge opportunity is going to come. And what is going to be green is not only going to be sustainable for environment, but we feel that it is going to be very strongly, we not only feel, but we believe that it is going to be, very, very sustainable for economics also. Like in COVID period, all the thermal power plants, there were payment delay problem which happened. But none of our, we never had to like moratorium and all, hardly we had to give any moratorium in our case. There was no, stress in any of our payments because renewable energy plants did operate on a must-run principle and we got paid in time. So never there was default. In fact, since a lot of liquidity support came from the government, we did much better than what, most of the lenders had done. So that is our vision and we want to take a very large pie. And let me also tell you 2-3 things. One is, of course, there has been some back burner delay in accounts some of the issues which came up, which are now behind us. But also, like it happens, the churning. It has been the churning of the company. Today, we are in a position that we know the direction in which we are moving. So there is a lot of clarity between promoter and us. And also, there is a lot of clarity in the sense of business direction, because there was, of course, sense of direction earlier also, but there were a couple of ambiguities around that, which have been taken away. And our system, like the current board also has now given a lot of powers to business committee to take decisions. So having had that kind of a clarity and direction which we have moved, and the opportunities which are there, as I said, we are moving from 140 gigawatt to 500 gigawatt. This is 223, and by 30 we have to move there. So in that space we are, many of my colleagues told that we have been the prime, we have been the prime movers, or we have been the first movers in this direction. So we hope to play a very good role there. And not only we are doing, there is a little bit of crowding, I do agree, in the space of typical project finance, but as my colleague pointed out, Ankur, that we have a lot of hybrid finance models, and our strength comes from hybrid financing. So we will try to take a very large kind of pie of the cake. And at least let me assure you that from now onwards, when I say now onwards means November onwards, the kind of growth we'll be able to present would be unprecedented. It will be, a kind of like that was already happening, because in the previous year, if you see that we had done 4,100, and with the same momentum, we would have almost crossed 5,000, at least 6,000 we would have reached, because the largest sanction happens in the last quarter, and that is a conservative number I am giving. So that momentum from now onwards we are going to maintain. So we are going to grow in a way which we have never grown in past, because of the opportunities, because of lot of policy clarity and risk mitigation around credit proposals, also because of good capital adequacy and the kind of liquidity and the debt equity ratio which we have, and the strong team of underwriting capability which we have.
Great, sir. Thank you for the comprehensive insights. I have one more question for you. So could you tell us a bit more about the partnership with GGGI to set up the Renewable Energy Infra Fund, and by when can we see it reflect in our accounts?
So, with Green Growth Fund, they are not going to be our partners in that. Basically, they are giving us kind of a, they are giving us the what we call support in setting up the fund, and basically on their own investment, they have done the business modeling for us, and they are scouting partners also globally who can be our partners. So we have had a couple of talks with various, because for a debt fund, one of the requirements of RBI is that I need to have at least two equity partners. And of course, we have requested RBI for a forbearance, but it has not happened so far, because the earlier debt funds were provided this kind of a forbearance. Both your L&T Finance as well as IDFC were provided this kind of forbearance, so we have asked for it. But notwithstanding that, we are at a very discussion with various, basically led by Green Growth Fund. They are the ones who are trying to find a business partner for us to take it forward. So we will work on that and see that this gets matured. Hopefully, I can't give a timeline on this immediately, but should happen as early as possible. But then we are also trying to work alongside with them, because not limited to setting up debt funds, but also scouting partners. As we are able, a lot of international development agencies, financial development agencies would now be interested in bringing their products in India. And if we can be used as, since we have that underwriting capability, and we have that that flexibility of doing hybrid products. So we can be a kind of intermediary between all these developmental institutions and the project developers.
Okay, thank you so much, sir. Nothing further from my side.
Okay, next we have a question from Mr. Jayendra Kumar.
Hello.
Please go ahead.
Yeah, thanks for giving me the opportunity, and thanks to the team for producing the Q4 results 2022. Good set of numbers. And I have a couple of questions. One is relating to the can we expect any monthly business updates from the company? And the second question is on many times since 3 years I'm observing this company. I'm a shareholder of this company since 5 years. I'm observing since 3 years. Many times the meetings will get scheduled and it is getting cancelled, and it is going on. It's never ending, and this is creating a lot of small investors like me losing the patience, and we are losing the confidence on the company. I don't want this to happen in the coming future meetings, and the net interest margin is very low. That is what I believe. And whatever the profit we are making, it is going towards the provisions itself, and it's not rewarding any way to the investors. Can we elaborate? Can you explain more about how we can see the company in the upcoming quarters? Thank you for giving me the opportunity.
I would not. I will like to answer this question, and I'm glad that you raised this issue so this can be addressed. So first of all, I do agree with you that there have been a couple of times in past, not more than one solitary occasion where we had to announce our results and go ahead and do it. That was, let me be very clear and transparent about it, because we have been trying to, do results as quickly as possible for the reasons best known to everyone here. What were the reasons? And there is, there was nothing like linking this with the forensic audit, linking this with the forensic audit, which, there's one view in the board that should be linked to the forensic audit. So that is the reason why, and of course, some time also was taken by the forensic auditor to do it. So there were a couple of times where we did try to have results as, on a scheduled date, but because of a viewpoint emerging that the forensic audit should be completed before the results, and that is why we were not able to, often reach to a final conclusion. So I do agree with you, but then now that we have come with that result, that is a thing of past, which is already over, because there was always this was the bottleneck, and that bottleneck has been crossed, so this will not happen. Regarding the NIM has, I think, improved quite a bit, and for an infrastructure company, it has gone up from last quarter, it was 4.02, it has gone up to 4.30. And for the year also, it has gone up from 4.19 to 4.30. So NIMs have been improving. That's quite a, if you look last 3 years, NIM and spread is one area which we have worked very hard, and we have tried to improve the operational margins. Yes, there have been provisioning issues, because I said there were legacy issues, and because of that, we had to do the provisioning, and we made some provisioning. And because of that, the profit numbers did not really 100% reflect the operational efficiency. And as my colleague CFO has just mentioned, that now the numbers have, that net numbers have almost, come down below 300 crores, and for which also we have resolution plan. So, most of it, the provisioning thing has been addressed, and the operational efficiency which we have on our system, and with the increased incremental loan book, probably you will find in fact, somebody had asked here question that when will you reach return on capital employed double digit? And let me assure you, if if you look at operating numbers, we are already above the return on capital employed, minus the provisioning numbers which we do. But having done most of the provisioning which has had to happen, and whatever little is left out, we have resolution plans which may take place in a quarter or two, and now that we have a full-fledged board in place, the things should move faster. So we should be able to give a double digit, I think, on the return on capital, ROC, return on capital employed, very quickly, maybe in a quarter or two.
Okay, great. Thank you so much, sir. In lieu of time, this was the last question. I will be passing on the mic to Dr. Pawan Singh for the closing remarks. Over to you, sir.
So thank you for all of you coming here and interacting with us. And already I have given you a kind of a roadmap as to how we will be moving. We will be moving broadly on the sustainability model, net zero. India's commitment to NDC, internationally determined contribution, will be definitely playing our role there as a good infrastructure finance company, and where we have opportunities. And as I said, that now many of these things have been streamlined and decentralized, and which should help us to take things forward in the right direction. And both in terms of growth and both in terms of operational efficiency, we should be able to come back to you. And somebody gave probably a suggestion. We would look at it, a very valuable suggestion, that can we give a monthly blueprint subject to whatever regulatory regulatory issues here. But we'll definitely from our side like to do that. I request my investment team to take care of it. And very soon we'll also have a director of finance. We have already advised for the post, and we will be having a director of finance in our company. And of course, the issues of the forensic auditor, whatever was there, we have been very, very transparent. We have given the replies. Every question has been addressed. Every point has been addressed. We have a very strong, understanding of our subject. And every RBI does our inspection every year, and we are, as almost zero kind of adversarial remarks from RBI on any of the inspection report. And we have been very, very clear. There have been issues, and there have been some kind of this created around it, but all the questions which have been raised have been adequately addressed in the replies which we have given. And let me assure you, we have a very strong, robust financial system. In past also, we have never had any qualification, and probably will not have qualifications in future. So with this remark, let me assure you that you will see PFS as a clean, green, sustainable infrastructure finance company.
Great. Thank you, sir. Dear all, we will be concluding this call due to paucity of time. We will soon be interacting again with the Q1 and Q2 results. Thank you so much, everyone.
Thank you.
Thank you all. Thanks for from team PFS side.